Hello, my fellow wealth hackers. This is Erwin Cito bringing you the Truth About Real Estate Investing show, where we interview action takers and experts so we together may learn their best practices, so we as hardworking Canadians may apply them to our own investments, businesses, and lives, personal lives. This episode is brought to you by me and Cherry. We don't have sponsors for the show. No one's going to pay us to speak to 18 listeners. I only share with you all the services that are offered by my Cherry and my wife, my wife and myself. Cherry and my wife are the same person. For example, Stock Hacker Academy is where everyday real estate investors learn the best practices in stock investing to earn cash flow in about 15 to 30 minutes per day from their mobile phones. After real estate, stock hacking is the next best side hustle there is. You've heard that from many of the past guests of the show. Among our students last year, among the trades that were shared with our students last year, 31 trades were shared with them. 30 were profitable. So that's an over 36% success ratio, translating into a return on capital of over 12%. I will be giving free demonstrations online, very similar to the one I gave to my kid cousin. He's a full-time musician, and he's gotten pretty good at this, but he made over 50% return in 2021 and 2020. Past results, of course, do not predict the future, but if you would like a free demonstration, go to www.stockhackeracademy.ca. In the top right, there's a button there for you to click free demo. Just register for that. At the demonstration, I'll have some special bonuses that we do not advertise to the public, that are only available to you, my favorite listeners, and of course my clients. And I only have one more demo to give before we begin the next course at the end of February. So don't delay, www.stockhackeracademy.ca for what I consider the future of side hustles. With real estate being so unaffordable for many, with also real estate investors or investors in general who are seeking cash flow, the stock market, that is, not real estate, stock market, it's in correction territory right now. So if you're looking to buy low, sell high, the timing couldn't be better to be getting educated. In the private lending space, I'm hearing a lot of challenges out there. My own clients here in Ontario, and there's a company out in central Canada. I don't have details, so I'm not gonna name names. But there's a company in the central Canada that's been ordered to cease operating their business by the local securities regulator. Out of curiosity, I went and checked their Instagram, and I could see how their posts would raise red flags for securities regulators, as they were telling folks, they're in their comments, probably in the videos as well, they're telling folks, if you're interested in investing in their projects, to contact them. And that, yes, like I said, that will raise flags with security regulators, especially if they're looking at you. And they seem to be looking at real estate investors more and more. This isn't the first real estate investor company that I've heard that has a securities regulator after them. This is very sad to see. I don't wish ill will on anyone. I hate the idea that people are losing money in real estate, which is why it's always been my belief that you should do your investing in your own name or a corporation that you own and control, as that is what I feel is the best investment. I'm not opposed to investing in passive investments managed by someone else. Just for me personally, that's if I do something passively, I don't invest nearly what I do when I'm buying a property in my own name or in my corporation's name. I only currently invest in 2 passive private equities using registered funds. As my research tells me, my experience in my research has told me that these are the 2 best that I've seen, and I'm always open to looking at other offerings. But at this time, these are the 2 best that I've seen personally. They both are registered with local securities commissions, so I can't talk about them, but I'm happy to refer you to them. You just have to ask me, and then you can reach us at iwin@infinitywealth.ca, and I'll be happy to connect you with these private equities that I invest in that are in real estate. One of the private equities is a young apartment building trust, and the other is a large-scale real estate developer. And again, that's two different companies. And again, those are the only 2 passive real estate investments that I do. So that's available. That can be maybe a good idea for someone who doesn't have enough for a down payment. So that's one option. And then for those seeking cash flow, my favorite is to stock hack. On the personal side, Cherry and the kids and I are enjoying the outdoors because you can't do many things indoors these days. Hopefully that all changes. This podcast comes out on Monday, so that'll be the first day that the lockdown is over, and I'm allowed to go back to a restaurant. But for now, we're skiing. We skied Mansfield Ski Club. It was pretty awesome. This is the first time we've ever been there. The lineups were tiny because Mansfield is a private ski club, and we were able to go there as guests. We're going there again Saturday. Again, the lineups are tiny, being that it's a private club versus a public club. My friends were telling me that they were skiing the same day and experiencing like 30-minute lineups to get on the chairlift. For us, after lunch, we were able to ski down the hill, which included the challenging side of the mountain, so which were black diamonds, and then we'd ski to the bottom of the hill and then right to the chairlift, and without having to line up, we'd go right to the line and then make our way to the chairlift and get picked up and get back on the hill. What's crazy is my kids, they're 6 and 8 years old, and they're able to keep up even while doing, they don't turn that well, but they can snowplow great, and they still plow down black diamond hills with me. They have no fear. They'll just follow whatever, and they'll just go whatever is in front of them, and they'll go to the black diamond. I've been saying to them as well that largely I feel a lot of these hill ratings are just in their head. As long as you know how to turn and stop, it doesn't really matter how difficult the hill is, because you can always just turn and stop. My kids have no fear. They just bomb down the hill. We have put them through a bunch of lessons. I can't stress enough education and learning and building skills. So my kids, this is the 3rd year that they've been skiing. They've been through a bunch of lessons. They went through a ski camp over the holidays, this past holidays, and we'll invest in them the same in their investing in entrepreneurship education. I actually had a guest on today, interviewed someone today. He's incredibly successful in the technology world, incredibly successful. I can't wait for you guys to listen to that episode. That'll probably drop in about 4 weeks after this one. But yeah, I've already thought about how I'm going to teach the kids. I'm not going to teach them personally, but they'll be getting education around computer programming. So I'll be looking into that soon enough. Anyways, hopefully they'll be able to attack all those different areas: investing, entrepreneurship, computer programming. Hopefully they'll be able to attack those areas without fear as well. The ski lessons are really paying off. So for me, selfishly, I can enjoy skiing a lot more because I don't have to wait around. I don't have to go slow. I don't have to go down green hills all the time. I can go as fast as I want, and the kids can keep up, or I'm still chasing them. Then on Sunday we hit a figure 8 ice surface. I don't know what else to call it. It's not a rink. It's not an ice rink, but it's this ice skating surface in the shape of a figure 8. It's at Humber College in Etobicoke for anyone who's looking for something fun to do outdoors. Highly recommend it. If you want to learn, if you like to skate, or you want to skate with the family and the kids. It was busy, but the conditions were really good. And Cherry and I have done a lot of outdoor ice pads with the kids, like public ones that are run by the community centers. I find those are a bit too crowded and chaotic. Like our kids did okay. They did fall a lot, but I'm a geek, apologies. But I used the saying from the Batman Begins movie, which is the first good Batman movie like ever, the one with Christian Bale, where Batman's dad, so what's his name? I know his last name's Wayne, whatever. So Batman's dad says, "Why do we fall?" He says this to Batman when he's a kid. "Why do we fall? So we can learn to pick ourselves back up." So I say it to my kids all the time whenever they fall down. Yes. And I'm not a creative person, so apologies for the bad jokes and the geekiness. And it's no different with my investing. Everything I do is quite systematic and mostly disciplined. And hopefully me owning some Tesla shares will work out. It's a very small amount. Otherwise, I prefer discipline. I'm a geek. So this is dumb, but I'll just share it anyways. I've even repeated, this is how much of a geek I am. I've repeated the Marlon Brando speech in Superman So like the 1978 Superman movie with Christopher Reeve as who played Superman. It's an old movie. Anyways, so Marlon Brando plays Jor-El. Jor-El's the father to Kal-El, aka Superman. So I've repeated that same speech to my own kids. I won't repeat it here because it's way too geeky. I'll let you Google that one. And also because I've rambled on enough, but I'll include the note in the show notes. And the show notes also get put out in the email blast when these new podcast episodes are available. You can register for that. If you give me your email address in any of my websites, then you'll be getting email alerts when this podcast is available. You don't want to miss the next couple ones. They're all excellent in my opinion. So on to this week's guest. We have Scott Dillingham. He is formerly the number 2 mortgage broker in all of Canada at that one big bank. So that big bank is one that you know and is on like every 3rd Street corner that you go by. So you know the bank that, but for legality reasons, we're not going to share the name of it. So again, Scott was number 2 across in the entire country in terms of how many mortgages he did as a mortgage professional. Scott shares how even though he was successful at the bank, he wasn't really happy there. He shares how things changed while he was at the bank, and also the negative effect to his health, leading to his exit from the bank to start Lendcity Mortgages, which is an independent mortgage brokerage with investor-friendly relationships, including for corporations and even for commercial lending on single-family homes. Scott has grown this business pretty quickly. They have almost 30 staff, including a commercial lending department. So folks looking for commercial lending, you can talk to Scott. He also has a sizable real estate portfolio himself. So he knows firsthand what we investors go through. He's a good guy. Scott is one of the top donors for Cherry Nice Charity, the Hamilton Bash Brigade. Scott shares his predictions for, being a mortgage expert. Scott shares his predictions for interest rates for 2022, fixed or variable rate, what his recommendation is for fixed or variable rate mortgages. And also he shares about his investing. He invests heavily in Windsor. He also shares where he's looking in the United States. And it's a city I'd never heard of, and the prices are pretty amazing. So you want to listen to this show. If you want to follow Scott, probably the easiest way to get in contact with him is their website, lendcity.ca. Lend as in like borrow, lend, L-E-N-D, city.ca. Please enjoy the show. Hey, Scott, what's keeping you busy these days?
Thanks for having me, by the way, Erwin. I really appreciate it. But yeah, no, everything's keeping me busy. When you run a company, it's a lot of work, but I love it, and we're having a lot of fun doing it.
Because you didn't always run a company. Well, you used to be part of a very big one.
Yes. So I used to work doing mortgages for investors at the bank. So the bank was cool. They had some really cool programs. I remember when I first started at the bank, you could do unlimited properties.
And what year was that?
Yeah.
Where's our time machine?
It was awesome. So, and this is all with one lender, which is crazy because usually every lender has their limits, right? So we could do unlimited. And then they went down to 10, which I still thought was good, but they introduced like a liquid funds requirement. So an investor had to have 100,000 of assets outside of the down payment to move forward. But it was still good because most banks and lenders, they weren't doing 10 properties. And then they went down to 5. So when they went down to 5, it was really, really hard for me to continue doing what I was doing, right? Because I was working with investors that had multiple properties, and I hated, making those relationships with people. Mm-hmm. And then you have to shake their hand and say goodbye because you can't grow with them anymore. Right. You're stuck.
All that work that you did, and investors too, with the plans of unlimited, maybe not unlimited, but they had probably plans to try to get to 10 properties or more. And then,
and then they change it, right? So then that hurt what I was doing. And I just found that for an investor, it wasn't good, right? How can I sit down with an investor and plan with them when the rules keep changing, right? So it was tricky. So then I started Lendcity. So that's kind of my transition. There's a period in between there that I'm sure we'll discuss on the show, but that's sort of what led me to do what I'm doing now. I wanted more options for clients. I wanted to be more fun. if you check out our office or even go to like Google and check the images from Lendcity, it's a really cool place. It's high tech looking. It kind of looks like a Google or an Apple office.
Oh, you did an office tour? You did a Google office tour? So
Well,
people
we
can
took a whole
click
bunch of
around your
pictures
office?
and put them on Google. Yeah.
Oh, okay. So it's not like the virtual tour of your office.
No, but that's coming. We have a videographer, like full-time employee who's our videographer. So that will be there. But yeah, so we just wanted to make it a really, really cool place. And that's what's keeping me busy. Right now I'm at home, right? Because we're under lockdown. So we're trying to, the government says, stay home if you can stay home. So I've got all this stuff here to work here. So just chilling out,
But you started the new business before the pandemic, did you not?
just before.
You bought the building, started a new business, left a job that you were doing very well, were you not?
Yeah, I was number 2 in the country. Like for my last full year there, I was number 2 in the country.
Yeah.
And
then what can you share what the title was? A mortgage advisor or something like that?
I was a mortgage advisor, yeah.
Okay. Number 2 mortgage advisor in the whole country.
For this lender.
Yeah. But for this lender, it is what? Top 5 biggest lender in Canada?
Yeah, absolutely.
For the listeners' benefit, we're not saying the name to be safe, but you all know this place.
Yep. It was a big lender. They had 1,200 employees at the time. So I finished number 2. I felt like I accomplished number 1. That was my goal. And I know I didn't get number 1, but I still felt like it because the guy that actually beat me, they rated you at the time based on your total volume, and he lived in Vancouver. So I live in Windsor, where housing is some of the cheapest in Canada. Maybe not now, but at the time. And he lives in one of the most costly places to buy. So I still felt like I beat him, because if he was in Windsor, I would have beat him. So
right,
I felt good.
Very cool. So, man, yeah, you bought a building with the intention of putting your office in it and doing a whole bunch of this stuff, and then the pandemic.
Yeah. So before I did that, it was like I was at one of those moments in life where you're like looking at everything and you're like, what should I do with my life? And I actually thought that I hated doing mortgages.
Okay, can you expand on that as well? Because what your lifestyle was like and your health and stuff.
Yeah. So I was really stressed out. And I was becoming overweight, right? Because I was always sitting down with what I did. So I was becoming overweight. I didn't feel good. It made me always tired as well. So, I always had so much things to do, but I just lacked the energy. So I was like taking cat naps throughout the day, and nothing would seem to help. I was actually drinking coffee nonstop all day, and it wasn't even helping me.
How many coffees do you think? How many coffees do you think you were drinking a day?
Probably like 6 to 8. And it's strong stuff too. Like it was not the weak coffee either. So I was going down that path, and then one day I was like, I need a change. I've got to change my life around. I don't want to be overweight. Like I don't like how I look or feel. I'm tired, and I want to be more accountable to my clients and just be better. So I was actually going to quit mortgages altogether and just do marketing for realtors, because I have a background in marketing and I'm really good at it, right? So I can do lead gen, like all kinds of really cool stuff. So I started telling a lot of people that I was quitting mortgages and doing lead gen. And even to this day, because we've been so occupied with growing the brand, I still haven't even told everybody that I told I was leaving mortgages, that I'm doing mortgages. But during that transition process, I discovered that it wasn't mortgages that I didn't like. It was being at the bank, because the bank had their own rules. At the time, they would only let me have two assistants, right? So even though you're growing, they're saying, oh, 2's the max. You can't get more.
Scott, when I met you, you had 0.
Yeah. So, and the thing that's crazy too is I was the first one to have 2. Like having 1 was the normal. But having 2, they're like, oh, we don't know how to do this. We don't know how to set it up in our system. And I'm like, well, I need it, right? So I quickly discovered that it wasn't the bank, sorry, it was the bank because of their systems and how they would allow me to grow.
Mm-hmm.
But beyond that, I also knew that it was my lifestyle habits as well combined, right? Sitting down all day for anybody, it isn't good, right? Just like eating junk food every day, it's not good. You have to create a healthy lifestyle. And it's really made me a happier person being healthier. And it's made me more productive at work. I'm closer to my family now. But yeah, so I started working out, started running. I have like Men's Health, they have an online subscription, and it's got all these personal trainer courses, and you can do the workouts at home. Behind me in my office, I've got a Bowflex. So I just kept working out and doing all those things. I'm not at my fitness goals yet, but I'm really, really close. But it completely turned my life around, realizing that I had to create a better system for the work that I was doing
Mm-hmm.
and for my health as well.
Can you share like how okay, so most people who listen to this are busy people. Can
Yeah.
you share how you fit in like the fitness part? Can you share a bit about your routine then that
Yeah.
gives you some more balance?
Yeah. You just have to do it. I think that's the number one thing, right? I was listening to Stefan Arinio. I was watching one of his courses from the past, and he said this, and it's true, and I've heard it many, many places, but people have time for TV. They have time for their phones,
Yeah.
their video games.
Yeah.
You know what I mean? You have time. You're just setting the wrong priorities. So really, you just have to scale back something. And I find I actually have more time to do these things because when I work out and exercise, my body and brain function at a much higher level. So I can actually get more done by going for a quick run, even though it might take 45 minutes, an hour. I can get more done losing that time because I'm so much more effective when I'm back in my chair, getting to work.
Mm-hmm.
But my routine, what I try to do, actually, I found this works really, really good. Everybody's different. But for me, I was doing a lot of running and different workouts. I found for me, the key to really get my metabolism up and to feel that burn like all day long is I row for about 10 minutes, but instead of using that bar that you pull when you row, I use like dumbbells and I curl them instead. So it's a little bit different, but it gives me much stronger arms and it burns my legs. So I get a much better workout than like rowing. So I kind of do
you're at a rowing machine?
I use the Bowflex, but it's it's like a leg press. So you're doing a leg press, but curling at the same time. And so I'll do that for 10 minutes in the morning. And it doesn't sound like much, but your whole body burns. And it's a constant 10 minutes, right? So
no breaks. That's hard work.
Yeah. But I do lighter weights for the curls, right? I don't go with 30 pounds, right? Because that would kill me, right?
Yeah, it's 10 minutes, bro.
Yeah. But it gives me that burn all day long. And then at night, I'll go for runs here and there. On the weekends, I'll do the complete, weightlifting and all that stuff. But I find the mix of doing those different things is really what propelled me into a more healthier, more fit.
Awesome. Yeah, I just ordered a walking treadmill because that's a stand-up desk behind me.
Nice.
So I'll do calls and stuff like that, phone calls or Zoom calls. I'll do it while walking.
Yeah, my sister does that. She's one of my employees, and at her office, she's got a walking treadmill there, and she's on it. She's walking, and when she's not on that, she's on one of those chairs that kind of rock back and forth for your core. So she sits on those as well. And so no, it's awesome. But I did find the workout of the leg press and the curling at the same time, that burns me so good. Like that is it. That's the secret sauce for me.
The other thing I do is if I want to watch TV, then I try to make a commitment that I'm active during it. So my Peloton is in front of the TV. So if I want to watch Leaf game or Raptors game, then I'm on the bike.
Yeah.
Right.
That's awesome.
Or I'm stretching afterwards. So then like people say I don't have time. Like, well, if you're just sitting there watching the game, like you don't have to just sit there. Do curls. I don't know. Do leg lifts. Do sit-ups.
Sit-ups. Yeah, exactly.
Anything.
And people like the Men's Health membership thing, and I'm not trying to promote it here, but it's like $10 a month. Do you know what I mean? And it's got all these trainers, and most of the workouts are meant for at home. So it's all like with your body weight. So people think like, oh, I need a gym membership and whatever, but you can literally do it $10 a month, and you can do your whole body just using your body, your couch, right? Using your couch. Some of the workouts are on your couch. It's so easy. So, but I think that would be a lesson that I would teach, is that anybody should get your fitness in check. If you want to be successful at anything, even if it's dating, right? If you're single and you want to meet someone, be a little more fit. If you want to propel yourself at work, I know sometimes it might be hard to see how one could benefit the other, but it's huge how much being fit and mentally strong, how that helps you to succeed in life.
I think more than ever, because we're in a pandemic, and as we end the pandemic this year, I think it's going to be a huge story that we have to take care of our physical health. And in turn, taking care of your physical health will likely take care of your help a lot with the mental.
For sure. And it's harder to eat healthier now too, right? If you look at the food our parents had back in the day, it was all natural from the ground. You know what I mean? It was all good food, but now it's so much is processed. So it's hard. Like even when you want to go out, like say you want to go out for lunch, it's hard to find somewhere near you where it's healthy. So I think that's a challenge too. But
I've actually had a lot of success because I have a nanny at home. So
perfect.
When we control what's in our fridge, then you control a lot of what goes in your stomach and on your plate.
Absolutely. Absolutely.
So how is business? How,
It's,
again, you started it before the pandemic, which is, you timed it perfectly.
So it's going incredible. We have 20 employees now. So,
you went from just you to 20.
Yeah. And
how
really,
long?
I would say, what's that?
In like last 3 years?
Yeah.
Okay.
But in the beginning though, it wasn't. So in the beginning, my two assistants at the bank came with me to Lendcity. So that was a huge help, getting things going. And the learning curve, there was a big learning curve, right? Going from the bank to a broker. So that took time. We partnered with a brokerage out of GTA, actually, just for our mentorship, and they take care of our compliance. But that helped to sort of fast track me in the broker world, because every lender has their own criteria and things that they look for. So somebody just getting into it, it's overwhelming. So it was great to have that mentorship. But so in the beginning, Lendcity was just a place for people to service my clients and my business, because I brought a lot of it with me, right? And the building I bought, it has all these tiny offices in it. And so my vision at the time was like a WeWork scenario. So I actually had the whole place rented. And actually, I love commercial, because when I signed one lease, just one tenant, I had it appraised after, because I ended up buying the property without a mortgage. Like I just used my own funds to buy the property. And then I was thinking, well, you know what, maybe I will get a mortgage, and I'll just use the money and invest in different things. So I got it appraised after. So I just signed one tenant, and the building went up 110,000, just like that. So I love commercial real estate for that aspect, right? Because the value is totally geared towards the income. And I had it all rented, right? And then COVID, and then lockdowns, and then people weren't coming in, right? So, but then over time, my mindset about my business changed, and I was like, well, let's do a team. Like, why can't we be the number one, mortgage brokerage in Canada, even online? Like, let's do this. So then I started to grow the team, but it's quite a different process. It's not 20 agents like you would think, or mortgage brokers. I would say half is, but the other half is all administrative staff. And I designed it like that on purpose, because I want to operate as quickly as possible. So when we work with a client, they have a dedicated sales rep that they speak to, and they have a dedicated administrator who works with them as well. So it's that one stop, exactly who the client needs to talk to. And the clients like that too, because they're not being pushed around all these different people. They know exactly who they need to reach out to. But because of that, the process is so much faster. Clients love it. It's so quick and easy. And we've set it up that way. So we actually have more admin staff than sales reps, but again, we do that on purpose. So we're fast. That's what we want to be. And I came out with the design from working with investors, because investors, right? Someone with 10 properties, it's a lot of paperwork to process, a lot of things to factor in. So we got really fast with that. So now when we work with regular homeowners, it's nearly instant because it's so easy, right?
They don't have a whole ton of mortgages and corporations.
Yeah. We have lenders that will send their pre-approvals to that, like fully underwrite up front. And we have about a 4-hour turnaround time from them. So we're getting written approvals from lenders right away. Yeah. So it's so quick and easy.
Can you talk to the specific, give us some detail maybe around the difference between while at the bank versus being a broker?
Yeah. So at the bank, you're obviously very restricted. The only things that I learned at the bank, and this is actually a blessing down the road, right? You live life and you don't realize what's going to be a blessing. But then you learn from your experiences. And then later on in life, you're like, wow, that taught me about this. So I have a great aha moment to share. So at the bank, we did residential mortgages, but I was very familiar with commercial mortgages as well, because they do them at the bank. So those are the only products that they offer, where a mortgage broker will have like B lending and private lending. So with the bank, though, the process was very tough because when it's such a huge organization, they don't move as quickly. And say, for an example, they have a backlog. They're my only lender to work with because that's my employer. So you have to wait through that backlog. Now, mind you, being number two, I was able to pull some strings and get some deals approved quicker and stuff, but that was a headache in itself, because then I'm waiting and I'm trying to call senior management and they're not available. And then it was a nightmare where,
and during a housing boom too. So
yeah,
it was busy.
Where now, like, if I know a lender's busy, then I'm not going to use that lender right now. I'm going to use a different lender who will do the application, right? So we know the timelines, we know who's going to do what type of applications. And so I find that a lot better too. And then the bank, it's like a bucket, right? Where I consider the mortgage broker space like a playground. So if somebody brings a bucket to the playground, right? Whatever fits in that bucket is what that bank can do. Where the playground is the whole mortgage brokerage, right? Because there's all these different lenders and they have all these different rules. So I do find that you can really get stuff done, and you got to know your lenders. And we actually got really lucky. I don't want to say the lender on here, but there's a few lenders that are not in the broker channel. Or I can't say they're not in the broker channel, but they're not actively working with new brokers. They were in at one point, they were accepting brokers, but they're not now.
Right.
And we have them. They approached us, and because of our volume and stuff over the years, and they're very rental friendly lenders. So it gives us a really nice advantage. So I do like that, because somebody coming into the game now, they couldn't get signed up with them.
Right. So just to clarify for listeners' benefit, not all lenders will work with independent mortgage brokers.
Correct.
Just so everyone knows, like for example, Bank of Montreal is well known for not working with the broker channel, as far as I know. Things may have changed. Things change all the time, which is the challenging thing about mortgages.
For sure.
Any investor listening knows what I'm talking about. Things always change.
Yes. And then not only that, the ones that are open and working with brokers, you have to qualify for that. If you're not doing so much volume with them, then they won't work with you.
Right.
So
that's just how business is done, right?
Yep.
Why manage multiple relationships if not all of them are going to do business?
Exactly. So here's my aha moment. So right at the bank, we do residential mortgages and commercial mortgages. So when I go to the mortgage broker side of things, the mortgage brokers generally will go from an A lender to a B lender. And I'm referring to investors, right? Mm-hmm. If someone has bad credit, you got to go to a B lender regardless. But we're different. So we actually have a dedicated commercial department. We've got 3 full-timers in there right now. We are growing and hiring more people for the commercial department. But we actually go from A lending to commercial. And then if it doesn't work there, we'll consider B lending as well, depending. But the benefits to the customer, if you compare commercial to B lending, they both have lender fees, approximately the same, between 1 to 1.5%, depending on the size of the mortgage. Okay, so that part's the same. But the rate on the B lender is higher. Usually it's in the 3s, could be in the 4s. for a B lender, where on the commercial side, rates are almost the same as residential. So for a fixed, they start, mid twos. So we'll go commercial instead. Now, the beauty about commercial is it doesn't have to be like an apartment building. Like a lot of people think when you hear commercial, it's apartment building.
Or office or retail or industrial.
Yes,
Yeah.
but you can do a commercial mortgage on a single family property. But what happens is the underwriting guidelines change. So instead of it being about debt to income ratios, which that's what the A and the B lenders are, it's still based on debt to income ratios. It's now based on the income of the property. So based on that, right, the borrower, it doesn't really matter their income as long as they've got the assets behind them and they've got experience within rental properties. If the property's cash flow, the lenders will move forward. But every product has its own niche, right? So commercial, if it's one of those properties you want to buy, you're going to lose a couple $100 a month, but there's a good appreciation upside, which I don't like those personally. Like I like to buy for cash flow, but you do see some investors that try to buy for appreciation. So those investors, it's not really good for commercial because they're going to scale back the lending because you're losing money, right? So they're going to scale it back till it does cash flow. So that, would probably be better on the B side. However, if it's a nice property, it's got good cash flow, then commercial is going to be a way better option than B lending. And most brokers don't have access to that or don't know that because they don't do commercial. There's very few that do. So that really sets us apart. And we're getting a lot of different things because of that. So it's really, really cool.
Does this also apply for properties owned in a corporation?
Yeah, they'll do them.
Is there any difference? They care?
No.
Prefer? No difference?
No
Cool.
difference. Yep, no difference. And they'll also welcome student properties. Now it is reduced LTV. They do it at 65% LTV on student, but they'll do Airbnbs on the commercial space, and you don't have to hide it, right? I know some people try to hide, or they'll combine all their tenants on one lease or whatever just to try to make it work on residential.
No idea what you're talking about.
Yeah. Me neither. I just heard that people try to do that. So you don't have to do any of that. You can just tell the lender it's a student rental. This is what's going on, and they move forward.
That's awesome.
Yeah.
Sure, people are, I think the natural question for people will be asking, like, where can I learn more?
Well, for sure. So I don't do the commercial stuff myself. I focus on sort of running Lendcity and the residential side. But we have a commercial manager. I can introduce anybody to him if people are interested in commercial and just to even chat about it. But it's a big part of what we do. And because we're still, even though I've left the bank, we're still very much investor first. We do a lot of stuff with homeowners. We've partnered with Care Remax, which is one of Canada's largest Remax teams. And we're part of their in-house mortgage office, right? And so they do owner-occupied stuff, a little bit of investing, but the way our systems are, it allows us, and people notice that's why we're part of these other brokerages, is we're able to process the application super quick. Right? And I know I said that earlier, but what I'm trying to say is not to promote that we're in different places, but that what we're doing is so good that we're being noticed, that we're being invited to go to these places and to service their customers. So
fantastic. Yeah, when these commercial mortgages, 25-year amortization, 30?
Great question. Normally it's 25. Okay. But with commercial, you can insure with CMHC. Are you familiar with that?
I don't think I've done one of these personally.
Okay. So if it's 6 units or more, you can go with CMHC for financing, and they go, usually it's between 35 to 40 years. They've just announced, so we haven't seen one of these applications because there's a lot of fine print around it, but they've just announced that they're going to go up to a 50-year amortization with as low as 5% down on apartment buildings if it's a green apartment building, or you're gearing it at least 30% of it to low income housing.
Oh, all easy stuff. Good.
Yeah. So I don't know how many people are going to do those, but CMHC normally, like if it's a solid like apartment building, so 6 or more units is when CMHC comes in.
Uh-huh.
Um, it starts at 15% down with up to, like I said, 35 to 40-year amortization.
Mm-hmm. What about like a duplex?
Well, duplex, they won't do a duplex. So duplex
Okay.
commercial, you're looking at 25.
25-year. Okay. Not the
Yeah.
end of the world.
So that is a downside, right? Compared to the B lending, because
Mm-hmm.
B lending will go to 30. Some even go a little longer than that, actually.
Mm-hmm.
So that's a little bit of a downside, but if you're somebody that makes minimal income, right, they'll move forward on commercial.
Mm-hmm. Mm-hmm. That's all fascinating stuff. And then, do you have any predictions for 2022 in the mortgage world?
I still think it's going to be going, right? I think the rates are going to go up. I even read something today that the prediction is at the end of January, the rates are going up. Now that's a prediction from some news company, right? So who knows? But I know they want the rates to go up. And I think while the variants are around, if they keep getting worse, right? Because with Omicron, right, we're getting more people getting COVID than previous variants. So I think if more of that happens and it's dangerous, I think that they'll hold the rates low for a while just to keep the economy going. But if say Omicron's done after the winter time, and there's no major variants that are right after it, I can see them start to raise rates for sure.
But we're talking like quarter point, half point, 1 point. Each raise.
I think, well, they do usually do it in stages, but over a year's time, I can see them raising it probably half a point.
That's it.
Maybe more.
Half a point over a year.
To one. It's hard to say.
Yeah.
Normally, it's so easy to predict this, but because COVID is what made them lower the rates, COVID's what's making them keep them low, and COVID disappearing is what makes them want to raise it, right? So it's so hard to say what's going to happen. But I'm in Windsor. I know you're in GTA. There is so much housing shortages all over the place.
Mm-hmm.
That I think in most major markets,
mm-hmm.
It's still going to be a seller's market for quite some time, I think.
Yeah, even with raising interest rates.
Yep. Like, what are your thoughts on that?
I think it's a really tough one. For me, it's not really going to change anything for how I'm going to invest.
Yep.
I'm not a fan of inflation, so I believe interest rates need to go up. Like that's the only way to fight inflation. Other than the at the risk of being like upsetting anti-vaxxers, but as the world gets vaccinated, then everything should ease up, right?
Yep.
People won't be sick. They'll be able to work. Supply chains will ease. Like everything should ease up as the world, as COVID works through the world and vaccines work through the world. But yeah, overall, I'm not too worried about it. Inflation is still gonna be inflation. It's gonna be high.
Yeah.
Just don't know how crazy high it's gonna be for how long.
That's it. And like you said, right? It's not changing your investment strategy. I wouldn't let this change anybody's investment strategy. There's a chart. It doesn't get too much into real estate, but it's called index chart. Have you ever seen an index chart?
No.
ANDEX. So it's the growth of your money from 1920 until now if you had invested in different asset classes. So it'll be like stocks, mutual funds, real estate, like all these other things. And if you look at it, you can tell when the recessions are because the numbers and the profits and everything goes down. But if you look at the chart overall, it's a linear line going up. So over time, everything goes up. So even with real estate, even if the market cools, even if the market crashes, I see that as temporary. It's not going to go down. Do you know what I mean? Like it'll go down for some time if it crashes, but it's back again with time. It'll keep going up. And you can look at that index chart. That's what they use in the bank to show people the different investments that they could do and how you should invest over a long period of time and not be scared of the short term. And it's true over time, even if it goes down, it doesn't mean anything unless you sell at that point in time, right? But if you hold on to it, ignore that your asset went down and just keep holding it and going, then it's going to go up. Mm-hmm. So I think the same thing with real estate, right? You just got to keep buy if you're available to buy and you've got the funds to move forward and you can qualify, do it. I wouldn't wait.
Yeah, actually, I was reading some stuff that with the fear of, well, not fear, it's going to happen, is that rates are going up, that the first half of this year, sorry, it's going to be
Yep.
busier because people will be trying to get their mortgages done before interest rates go up.
Yep.
So it's going to be a fun spring market.
Yep. Yep. Anytime that they talk about changing rates, it
Yeah.
goes up. And
Or
then
changing
especially
mortgage rules.
yeah. And I don't know, did you read that report? It just came out where CMHC is considering, well, they're doing the study to try to get the government to change the rules of 25 to 35% down for an investment property.
Mm-hmm. Oh, that'll just market will go nuts before that, and then it'll come down.
Yep. Yep. So I think people will jump in before that. But the thing is too, is when I read the report, that was geared towards like residential properties,
Mm-hmm.
not commercial.
Mm-hmm.
So I think that opens up another niche on the commercial side of things because they really do need housing, right? So for investors, the natural growth that I see is they'll buy tons of duplexes, fourplexes, whatever, and then they get into those bigger 6, 12, 18 unit properties, right? So the rules, if they tighten on the smaller stuff, maybe shift towards the bigger stuff where the rules have stayed the same. So.
Mm-hmm. Which is interesting anyways, because I'm in a position with my portfolio that I hate everything is a higher down payment than 25% down. I haven't done one of those in ages.
But maybe not if you go commercial though.
I like my space. I like my duplexes. I can't wait to do garden suites. Actually, that's a good question. I didn't even think about asking that question. Have you seen anything around financing for garden suites?
It doesn't come up much for me because I'm in Windsor, right? And I know that's more of a GTA thing. There's not many lenders that understand that. Same with modular housing right now. We have some lenders that do get it. They will move forward. I find for me, it's easier with a commercial mortgage because they see that and they're okay with that on the commercial side of things. But residential, I find there's not too many lenders. There is lenders, but there's not as many that support that.
Right.
So it's one of those things that I think with time they'll improve. Just like modular, like we help clients build modular houses. We've got some financing for that. But what has to happen is they have to use this third-party company to do the build. And then they switch to a regular lender when it's done, because the lenders will do a modular home when it's complete, but they just don't want to assist in the building. But I think that's changing as more and more of these modular homes, ADUs, like we need more housing, right? So I think that you'll start to see the lenders open up a bit on that.
The clients that are doing modular homes, what are they doing? Are they building additions? Are they doing top-ups? Do they tear down a house and building something new?
So what's big that I'm seeing is new builds first off, right? Because a modular home, even with the shortage of materials that we had, they're still pumping them out in 8 to 12 weeks. So you can get a modular home really quick. Some of the companies and quotes that we've seen have been cheaper than a stick build. Not all of them, okay? So I don't want to piss off any builders out there because it's not always the case, but we have seen some models that were cheaper. But really where they're doing it is they're adding an ADU. That's the number one thing that I'm seeing. Right. They've got that extra space in their yard. Their property permits if they add it and they increase their rents, $1,000 to $1,500 depending on location by having this ADU. Something small like that. I know 2 local manufacturers that's something that you could rent out for $1,200 to $1,500. They're charging between $120 to $150 for this complete envelope of a building. Just it's all done. So
I can't wait.
It's kind of worth it, right? Because if you think back to the 1% rule,
oh yeah,
it's like applying on ADUs.
Yeah.
Not on houses, but on an ADU, the 1% rule applies. So.
Okay. Oh, just pause you there, Scott. For our listeners' benefit, when we're talking about modular, apartments are being manufactured off-site in an off-site place, and then they're brought onto a property, and it's pretty much ready to go. They just have to put on a concrete pad usually, and then do all the finishings.
Yep. And a couple cool things that I didn't realize as well with them that I'll share too, just to add on to that, is you can go up to 5 stories high with a modular home, because like out of wood. So you can go 5 stories high, And the other thing that they told me, which I thought was super cool, is they're CSA approved in the factory, which often supersedes, not all the time, but it often supersedes local code requirements. So they're usually a lot faster to get approved for a build
Oh,
than a regular property as well. So I thought that was super interesting about the CSA approval.
that's fantastic.
Yep. Some of them offer Tier on warranty as well, because some lenders will want that. So there's not all of them do, right? So you got to kind of look at everything when you're choosing a manufacturer. But it is becoming a more popular thing that people are doing.
Mhm. And then how's the financing work? Is there construction, there's like quote unquote construction financing available? Or are we talking about when it's done, it's like the refinance, like we go
Yep.
commercial
So
or
we have lenders that'll finance the construction.
no way.
Yep. So they finance the construction. It is an alternative lender. It's not a major bank, right?
Uh-huh.
So we finance the construction, and then when it's done, we refinance,
Mhm.
and we just, group everything into one, and the client's good to go.
Is that a popular solution?
It's getting, yeah, it's like, the thing is, ADUs, adding an ADU is not a popular investment strategy yet. It's getting more and more. So, if you want to build an ADU, you've got to refinance your property first. But what if you don't have the equity to do that, right? Some people do, but if you've recently bought the home, you might not have equity to pull out to do this, right? So that's when you would get this construction loan. The other beauty of the construction loan is they don't really look at income. Like, they don't care about the income, this lender specifically. So if you have somebody that's a professional investor and they want to do this, we can help them keep doing it over and over and over again, because they're not looking at the income. So it's really cool, the options that are out there.
That's cool, and that's the benefit of working with a broker outside the bank is you're not, you called it bucket. You're not stuck in a bucket. You can play with everybody, everyone
That's
at the
right.
playground.
Yeah. Go on the swings over there, or go down the slide over there, right? You can do the whole thing.
Yeah, awesome. That's pretty cool.
Yeah.
And you were also an investor. You have a sizable portfolio, do you not?
Well, I do. I must say, though, that I'm more interested in investing in the States now. So that is something I'm considering. With the lockdowns and the landlord tenant rules. Knock on wood, I had all good tenants. I didn't have any bad tenants. But that's my next thing. I was born in the States. I moved to Canada when I was like 3. And I just obviously stayed here. But because I have that in there, that's what I'm looking to do next. And to be honest with you, there's actually lots of clients there. There's some people that I know that are setting up like a network where Canadians can buy in like Florida and stuff like that. So these things are happening because people want that US property. Landlords want that control, right? It's you don't pay rent. 2 weeks later, the sheriff literally will kick you out, right? So landlords have that power. I don't think that power should be abused by any means. I think some people do abuse that. But the way the Ontario Landlord Tenant Board is, I mean, that's a whole nother podcast on its own, but it has its troubles. Yeah, it has its troubles. I'll give you an example real quick, and then maybe we can move on. But I had a bad tenant. Well, actually, it was a good tenant in the beginning. It was a boyfriend and girlfriend dating. They split up. So the guy wasn't paying the rent anymore. So the girlfriend moved out, the guy stayed. So I processed the eviction. It took a couple months. And then right before the eviction date, he let his friend move in there. And then the tribunal said, oh, well, the eviction was for him. He's already gone. Someone else is in there, like a squatter's now in there. So now you have to redo the whole process. So really, he could have just kept swapping people, and I could have never got them out. Now, it worked out good because I ended up going to the property because I had to help something on the main floor tenants. And that guy was there, and I told him to leave. And he actually listened. Like, I was there and I'm like, you leave right now because you don't live here. You don't pay any rent. And he listened. So I'm like, good. But if he said no and he walked upstairs, do you know what I mean? Like, I couldn't have done anything. So I don't like that landlords who are doing the right thing don't have the natural ability to get somebody out of their property that shouldn't be in there. So for
Squatter,
me,
nonetheless.
yeah, like
You had
I
no
love
agreement with
investing.
them.
Yeah. And I love investing in Canada. So I'm not saying don't do that. So I want to make sure that message is there. But
Yeah.
I have a bunch of, like you said, a large portfolio here in Canada, and I'm keeping it. I'm not getting rid of it, but I want to diversify. So that's why I'm going to the States, is just to
Mhm.
diversify.
Mhm.
So I don't want anybody here to be scared. I just, that's why I want to go to the States.
Where are you looking?
Well, I live right across from Michigan. So in Michigan, I was looking at Grosse Pointe. Grosse Pointe has one of the highest per capita income in all of the states. And the housing is really, really cheap there. You can get a nice place, 100, 150.
Gee,
Yeah. Obviously US dollars, of course, but
what a funny name for a high income area.
yeah. Yeah.
Grosse
So that's
Pointe,
kind of where I'm
Michigan.
looking. Now, I still haven't completed my research on it. So if I look into it and I
Uh-huh.
discover there's things I don't like, I'm not going to move forward, but it's somewhere that's local. It's a waterfront community, and there's good income jobs there. So I figure it sounds good on paper.
That sounds awesome.
Yeah.
It sounds pretty. Why is it so cheap if it's waterfront and high income?
Well, I should rephrase this. The properties that are 100 to 150 are not on the water.
Uh-huh.
The water, you're looking at 250, 300.
That's still cheap.
But it's the small town goes like it's along the water. So, because it's kind of, if you look at the map, it's where Michigan kind of starts to curve around and then heads back down to Sarnia. So it's very much like the length of the town is along the water, kind of wraps around it. So it's, I don't know.
And they got good drinking water. I'm sorry, I'm ignorant. I don't. I only see the occasional headlines.
Yes, there's good drinking water there.
Okay. Okay.
Not in all places, but there is.
Okay. Yeah, and that's actually a good point for like the fellow ignorant Canadian. If they're investing, like make sure everything checks out. Because if they don't have drinking water, I can't even imagine what the real estate prices are.
Yeah. Yeah. No, that's a good point.
Right. For anyone who doesn't know, like I forget I forget where in Michigan, like all their plumbing is like rotted out or something, and they have like the city, or I forget who is just giving out bottles of water because the city has.
I forget the name of the
Yeah.
town as well, but
Yeah.
yeah, it's like the water when you turn on the tap, it's like a brownish color.
Yeah, because they didn't do proper maintenance and whatnot, and also because I think because they're broke. I think that city is
Yep.
broke.
And they get lots of flooding over there too. So even when they
wonderful.
do try to clean the water, then it gets recontaminated, and yeah, it's not good.
So yeah, no interest in Detroit then.
I don't know. They had those. I don't know if you heard about it, but you could get those houses for like $1, and you just pay the property taxes.
I'm sure this is in a wonderful neighborhood with tenants you'd love to rent to.
Some of them aren't bad, actually. Like really, some of them aren't bad. But so I'm pretty sure all those homes have sold now. But I was looking at Detroit. I actually will say Detroit came a long way. They're a lot better.
Mhm.
But I think everything with the COVID, right? It's slower right now. But they've really done a good job in Detroit. So I would say people that are interested in investing there, I actually do think it's a good opportunity. I wanted something a little bit higher end, so that's why I went to Grosse Pointe. But
Higher end, not in
yeah.
price point.
I know.
Maybe relative to them, not here.
Yeah. But I don't know. I think it's a great place for someone still to invest. But no, I'm not investing in Detroit. But then I'm also considering Florida as well, because Florida is huge. Florida, you can get a nice property again on the water, and 250, 300 in Florida. It's more money, but it's Florida, right?
Mhm.
So you get some vacancies, go down there, hang out.
Mhm. So does Lendcity have investment products for Canadians to buy to buy in the States?
We're working on it. I'm considering, because I'm dual citizen, right? So I'm considering actually getting like my broker license in the States. I just need to see for compliance in Canada if I'm allowed to do both. Because if I could, that would be awesome. But we already know the lenders that can lend to Canadians that want to go over there.
Mhm.
We've already got all that ironed out.
Can you share who they are? Because it seems to be a common question. Because a lot of people I know, they just bought stuff with their HELOCs.
Yep, there's quite a few. So there's if you go to TD or Royal Bank, they have a cross-border banking. So the problem with their program is that they're going to use your Canadian credit and debts and income into the debt ratio calculator. So if you're close to your debt ratios here, they won't lend you over there because they're still
Makes
looking at all
sense.
that. But then there's it's called Itin Mortgages. And I don't remember the exact what that acronym is, but what it is ITIN is a taxpayer ID. So a Canadian would get a taxpayer ID. And what you have to do is you have to file 2 years of your Canadian taxes in the States. And, before we started recording, Cherry came on and we're talking about how, Canada and the US, they have a tax treaty. And depending on how much taxes you paid in Canada, you may or you may not have to pay in the States, right? So that is something to consider. If you're a high income earner, by doing this, you might actually have to pay over there. But if you're not, you don't have to pay. And then there's some credit unions over there that will use your income that you filed in Canada to help you qualify. And they're not looking at your Canadian holdings. So then you've got more of a clean slate. So there is a process to that, but then you can qualify. Even if you have no credit over there, they'll move forward.
Awesome. And you'll keep me posted on if you can get U.S. mortgages, because I swear it's a hot topic. With the affordability issues here.
Yep.
Yeah. You invest far away. Like my thing is still has to be within an hour drive.
I think it comes down to your team, right? If you have a team, then you're okay. But
I've just had so much turnover on my teams. I'm sure you've had turnover in your teams too. It's just not within my appetite to keep working on teams, especially like multiple teams.
I think the biggest turnover, like not from an employment standpoint, but for like investing standpoint, is contractors. That's who I have the most turnover with. You get a good one, right? And then they move on to something else or retire or
it's a housing boom, man. They're in high demand. They can do what they want.
Yeah. So that's the one role that I just can't lock down. So
yeah. I've just seen so many property managers come and go.
No, it is mine. I've been good with mine actually. In the beginning I had to go through them, but I also took that as a learning curve, right? Because you've got to figure out who you can work well with and whatever. But then the most recent one I've had for like 7 years. And he's been awesome.
Fantastic.
Yeah.
Good for you. All right. And then, so Scott, we're running out of time. I get this question. I imagine you get this question too. Is it too late to start investing in real estate for these new investors?
No, just like the index chart. I encourage anybody listening to this to look it up. So it's ANDEX. It does have real estate on there, but real estate is only like one of like 10 different graphs on there. Because the bank they're trying to push more of their equities and mutual funds. So they build it out to show more of that. But look at the index chart. It shows you the past 100 years of real estate pricing, and you're going to get those up and down, but the graph is always going up over time. So, I think if you wait, you'll just end up entering and paying more for the property, but you'll still do well. Even if the real estate market's going down, I still believe it's a good time to buy. If you have short-term goals, probably not, right? That's probably not a good idea if the real estate market's going down. But if your horizon's long-term, you're going to make out. And at least if it's going down, you get a bit of a discount, right? But I don't know. I think do it now. Like, don't wait, right? When was the best time to plant a tree, right? It's either now or 20 years ago, right? So you don't want to delay.
Awesome. And then what markets do you service? Because then you mentioned you're a Windsor, but
so so I own the Canadian Real Estate Network, which is like an education platform, and we just have articles on there and podcast interviews and stuff like that. And with that, it's Canada wide. So we're getting leads from all over Canada. As part of Dominion Lending, we have access to submit to all provinces in Ontario through what's called Access Desk. So we just pretty much partner with someone who's licensed in a different province, and we can move forward. So pretty much we can lend all over Canada with that access. So
okay. And then where can folks follow you or connect with your team?
Yep. So if you just go to lendcity.ca, that's our website. So you can check that out. All of our contact details are there. You can see some reviews. You can look more into our financing. And then we also have on Facebook and Instagram, just look up Lendcity, and then you'll see us and all the stuff that we're doing. We do a lot in the community, and we're trying to do some stuff that's fun so you can really get to know us on a deep level, not just talk about rates and stuff. So if you're bored and you're looking for some laughs, we try to add some humor to it. So
No TikTok? Well, that's fun. That's what the young people tell me.
yeah, it does. It's dry, right? It's dry. So you gotta make it a little more fun. So
Oh, Scott, I made a note. You do any crypto? Bitcoin? Anything? Gold?
I do. So
okay.
during that stage when I was leaving the bank and figuring out what I was going to do, I had tons of cryptocurrency miners in my house.
You're
Under
mining.
my front foyer, I had 8 rigs. Now I wasn't doing Bitcoin. I was doing the altcoins. I was doing Ethereum and dual mining. And so I had a bunch of those going. Now I ended up selling them off, but I kept all the coins. And the only reason I sold them off is because you do need to upkeep them, right? If there's a fork in the currency, you have to realign all the miners so it can continue to mine that. And it was a bit of a job, so I stopped doing the mining. And but I like the purchasing side of things. So yeah, there's a whole bunch of coins. I went all in. I don't know if it's a mistake yet, but I went all in on Electronium. I don't know if you ever heard of that one.
I've heard of that one. I'm no expert
So
though.
they were the first mobile miner. So they have you could use your phone and you could mine this coin. And instant, like, so they have an instant pay app, so you can transfer funds instantly. And they also have like it's called AnyTask. It's kind of like Fiverr, where you can request a job or whatever. People post things that they can do, and you can pay with Electronium. So it actually is like a pretty solid currency, but they just I don't know, they're not getting a lot of traction. But it's from the UK, so it's UK based. But they are working with the UK government, and the last news report that I wrote about helping them to make their digital currency. So I don't know. My thoughts are there's going to be some big things with it, but I do own some Ethereum and stuff like that. I didn't join the Bitcoin thing because there's too much up and down. I know a lot of people like it, but my thing was there's too much like speculation and people always hacking in. And I just was like, well, I'm going to try the other coins because they're really cheap. And then, even if they get to a couple bucks, I'll be laughing. So that's what I did.
Do you see much of a future for the crypto industry, Bitcoin?
I do. Yeah, I actually do. I can see them becoming more energy efficient, right? Because Bitcoin mining, obviously, that's not good on the economy. Sorry, not that it's not good on the economy. That's a bad word, but it's not good for the world, really. It consumes so much electricity, even more than countries, right? So I don't think that is sustainable, but a lot of the coins are shifting to use low energy and things like that. And so I think it's a good means of method of payment. And people, because I don't know if you know this, but Canada, they're coming out with their own digital currency. Like all these countries are having their own, and there's so much regulation on that. And I think it gives people an avenue to their own wealth and to create their own legacy, really. And I don't think it has to be like a legal activity. I just think that people, they want freedom, right? And so if you're going to go to a bank and you have to pay $100, I'm just making this up, but if you have to pay $100 to do a bank draft to somebody overseas, a family member that you want to help out, wouldn't it be better if you paid $1 and sent it via crypto? Do you know what I mean? So I think it gives people that power and more control over their money.
Mm-hmm. I think my favorite use case is like if someone, like for example, someone here's from Afghanistan,
Yep.
and they want to send money home to their family. What's the ideal way to do it?
Yep.
Because if anyone doesn't know, the Taliban, I believe, I think they're mandating their own currency. I don't even know what it is.
Yeah.
So how good is that currency? Do you really want to deal with that?
Yep.
And also, for good reason, our government's worried about money laundering and funding terrorism. So how are you supposed to get money to your family in Afghanistan?
Yeah,
Right.
for sure. And so that's the bad part of it. I think,
Mhm.
right? Because
Mhm.
people are using it for that.
Mhm.
But I think it does give people freedom, right? And when you think about it too, like the banks, when you know how they work at the core, so you have to pay to have a bank account, right? And you're depositing money in there, but really the bank can lend out $10 for every dollar that you deposit. So they're just making so much money. So you're paying somebody to hold your money. Where if it's crypto, you have that control, right? You are your own bank.
Yeah. The whole
So
like paying for the bank machine, the
yeah,
convenience fee versus
yeah,
using the teller.
I know. It's silly.
Yeah.
So I don't know. So I do have it. I just but I diversify, right? So that's why I want to go to the States too. Like,
Mhm.
and again, nothing wrong with investing in Canada, but I have stuff here. So I want to get stuff there. I have crypto. I have solar panel income, right? That's different. I have business income. So they say you want more streams of income
Mhm.
to have the best retirement and success financially, right? So
Mhm.
that's why I'm always looking at different avenues to go into without taking me from my core business, which is mortgages, right? But anything that's passive that I can just invest into, I'm open to it. So
Was the solar income something from the past or is it more recent?
yeah, it's from the past. They don't have those contracts anymore. So
Yeah, when the Liberal government was just paying like crazy.
yeah,
Yeah.
yeah. So that's
Awesome.
coming in. So I get like it's probably like 10 grand a year off one house from solar income, which is crazy. And the cool thing is with this though, is when the contract is done, because it's a 20-year contract. When the contract is done, I can power the house with that power instead of selling it to the city. So then I can jack up my rents a bit because I can say it includes electricity, right? So it was a win-win to get those solar panels when they had those contracts. So
Mhm.
now, I know that's not available now, um, but
We'll see. We'll see. We'll see if the Liberals get back in power.
yeah, it might. You know what? It might come back with the push for everything to be more green and everything like that. It might actually come back. So
Mhm.
we'll
Great.
see.
We won't go there. We're not going to politics.
Yep.
Scott, again, thank you so much for your time. Any final words you'd like to share about anything? Words to live by? Quotes that you love? Advice
Um,
to make money? Health advice?
no, I just think so. Like I have my own podcast, and I recorded it earlier today. And the one message that was in there that I think that everybody should do, that I'll share with you and your team here, is vision what you want in life, no matter what it is. Think about it and believe that you're going to have it, and even write it down and put. So, say you want a Lamborghini, put I have a Lamborghini and write it down. And it's so weird, but when you write it down, it becomes real, and you just think of it. And whatever it is that you want, I really believe that you can get. Anybody can get it, but you have to vision it, and you have to vision yourself already having it. And it sounds so far fetched, but it's true, because they say, like, say you're having a dream and you're falling from the sky. Usually you wake up, right? Well, actually, every time we wake up, but they say if you actually hit the ground, that you could die, even though it's a dream, that you could actually die in real life, because your brain and everything thinks your dreams are real. Like what you see, it thinks is real. So it's proven that if you just visualize what you want, you will get it. So I just want to share that with everyone who's listening.
Probably is real because we're in the Matrix. So
Yeah, it's true.
I'll just add to that is something I've been doing more recently is I've been meditating every morning.
Okay.
And so I'm being intentional about what I want.
Yeah.
So if you want a Lamborghini, for example, then every day be intentional about your thoughts and what you're going to do that day to get you closer to that vision.
Yep. And how do you find it's working for you?
Yeah. Yeah. So start a electronium rig or or buy a house in Grosse Pointe. I don't know.
That's it.
Oh,
That's it.
please, folks. I'm just joking. None of this is advice. I have
Yeah.
no idea.
But it does work though. It totally works, because your body, like we work on an autopilot. Like when you think of driving to work, it's on autopilot. You don't really know how you get there. But if you're visioning, you've got that Lamborghini, if that's what it is that you want, your body and brain and everything will naturally work to you getting it. It's really cool how it works.
And if you envision like yourself on the couch watching the Leaf game, you will have it.
You will have it. Yes, you will call in sick from work. You'll do whatever. Exactly.
Amazing. Scott, thanks so much. Lendcity.ca, best place to reach you guys.
Yeah, absolutely.
All right, awesome. Oh, before we go, can we talk about Jillian a bit?
Yes.
Throwing you a bit of a curveball. You got time?
Yes.
Yeah, can we talk about Jillian Irving's role at Lendcity?
Yes. So Jillian is our face in the GTA market. So she experienced real estate investor, right? She's been doing it for a long time, large portfolio, and she's on our team, but she's in Toronto. So the cool thing with that is if somebody wants to meet face to face, different events and things, she's right there to support you. But then behind the scenes, she has my team, she has the admin support, and I do most of our underwriting, like behind the scenes. I'll review all the files and whatever. And so we get stuff done. So yeah, Jillian is amazing, and she just really knows her stuff. Great to chat with. So I would say for the GTA area and clients working with Irwin, that I would actually ask for Jillian when you call and go to the Lendcity website, and then Jillian will call and go over all the details with everybody.
Yeah, I've known Jillian for a while, so she lives a lot of the same stuff that I do, trying to get financing and stuff. So she kind of knows what our clients are looking for. Well, she is our client, so she knows exactly what our clients are looking for.
Yeah.
Amazing. All right, Scott, thanks so much for doing this. Congratulations on your success. That's so awesome how things have gone since leaving the bank, and look forward to talking to you more this year.
Thanks so much, Irwin, for having me. I think we talked about doing a podcast together for probably 7 years, I think. Something like this. We always talked about it, and we've done it now.
Yeah, you were when you were at the bank is a little bit different, right? Understandably. Sure. Yeah. Like you said, rules. You cannot promote yourself. I don't know.
I know. It's crazy. But awesome. Well, thanks again for having me.
Awesome. All right. Have a great day.
You too.
Thank you for listening. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy in a virtual free training class every month. Go to investortraining.ca/podcast to register for our next class. I publish an episode here every week, so subscribe if you want to keep learning from seasoned investors like myself and my guests. Again, if you're ready to learn the nitty-gritty about real estate investing, register for our next free virtual training class at investortraining.ca/podcast. Again, thanks for listening to the show. Talk to you next week.